Okay, mic check. Good morning. Good morning. Should be able to see the screen. Mr. Blue here, TradePhantoms.com. And I'll go about an hour, give or take, give you some pre-market prep. Mainly through futures. I'll start out with futures, S&P, NASDAQ, S&P, and gold. Today's date is Tuesday, April 8th. And volatility is here. So hopefully everybody is adapting to this said increased volatility. I bring this document up every day for the most part. And it's always been super important, but it's even more important during times like these, given the fact that you want to be looking at the higher time frames. Okay, so Phantoms, we operate mainly off the foundation of demand, institutional demand and supply, right? With a top-down multiple time frame analysis approach. Monthly, weekly, daily, these are the higher time frames that you must be aware of, especially during times like this. So we do, of course, live trade rooms and sessions and things like that. And especially during Mondays, on a Monday prep session, we cover essentially where we are on a kind of macro picture, technical wise. And the key takeaway here is orange. Anything that you see in orange has to do with the monthly time frame. Yellow is going to be weekly, and daily is going to be blue. Okay, map out last month's high, last month's low, and relevant monthly highs and lows, so on and so forth. We go through some exercises, at Phantoms, right? And you have some bullish, bearish candlesticks. Okay, I kind of cover this with due time, and we also have this liquidity map here. You just kind of park this over here to the right. This is extremely important right now, understanding where you are on the higher time frames, down into the smaller time frames. Okay, so we always want to start with the monthly, the weekly, and the daily time frame. All right, that said, we do have reach out to what's going on, Ness. Reach out to Phantoms support, and they should hook you up with a link there. I got you covered there. Okay, so I got the monthly here on the left, weekly here in the middle, daily on the right, monthly, weekly, daily, monthly, weekly, daily. So important, so important, so important. All right, here's SPYs. Here's SPYs. I know it might be a little harder to see. Okay, but here's the daily time frame. Just kind of scrolling back here. Yesterday was an amazing day where we had a we've been dropping, right? Dropping pretty significantly here. Okay, S&P touched down about what 20%, give or take, yesterday, right? So bear market territory, if you will. There was the news across the stations and the radio stations and all that. However, we had a couple of monthly lows down here, April, May, and then we had this February low down in here, right? So we kind of gapped through this May and April low. We gapped down and flushed down a little bit here to what's called a February low. We also had a kind of a weekly low down here too, and an unfilled gap on the SPX. Okay, and the point that I'm trying to make here is that it was a little bit more of a novice gap, move down, close on red, gap down into getting down into some kind of fresher level of demand. Okay, so even though everybody was claiming that Black Monday was going to be happening on yesterday being Monday, okay, we gapped down, we flushed down a little bit down into a little bit of some fresher kind of demand level here. The team was kind of prepped for this. Okay, then we flushed up like insanely. Right now, yesterday there was a unverified news announcement talking about how from CNBC and Reuters talking about, which ended up being fake, about how Trump was open to a 90-day pause on the tariff talk, so on and so forth, or the tariffs. That came out to be fake. However, before everybody figured out that it was kind of a unverified announcement, SPX, SPY, S&Ps, NASDAQ ripped up. Okay, kind of insane, right? It was kind of a record-breaking move just in one in one session. Okay, so we had a 400-point swing high and low between yesterday's high and low. Yesterday being Monday, the 7th of April. Right, so you can see even in SPYs, 8% move from high to low yesterday. So that widened some range here. Okay, now we closed here yesterday green. We buyers is trying to come back up just a little bit here. Okay, just maybe for a little bit more of a short-term bounce. Of course, we're gonna map out some levels, so on and so forth. Close here, slight gap up, still inside gap. I mean, anything for the most part based on yesterday's 8% swing high and low is going to be probably inside gap. But we do have a slight gap up right now. Futures are up about 2.5%. Okay, mapping out yesterday's high up here at 523 on SPYs. Yesterday's low down in here at 482, give or take. Okay, and so we do have this unfilled gap up here. That's noteworthy. I am also looking at just giving y'all some levels here for today. There was a weekly kind of what we call like a sneaky weekly low right in here, right below the September low on the higher time frames, and that got broken, that got gapped through. Okay, but the point that I'm trying to make here is you might want to pin the 530.94, rounding up to 531. This could be a level for what we call a bull trap. Okay, so this is on my radar here for SPYs today. Okay, in the event that we break yesterday's high, and then this is Friday's high right here. Okay, this is Friday's high as well. It's for about 520, 525, 580, give or take. Okay, we could, there's an unfilled gap here, and a lot of folks, if we rally up, a lot of folks will, they're going to fill that gap, they're going to fill that gap, and it could be a potential trap right up here. So a couple, three levels that I'm looking at: yesterday's high, 523s, okay, SPYs, 526, rounding up, and then the 531. Okay, that's going to be kind of areas where, if in the event that if we're long, okay, and we get some bullish trades, we would elect to take some profit at least at a minimum, and then potentially look at entering into at least a what's called a bull trap short up here. Okay, if we go lower, okay, I'm kind of looking at I got some monthly levels here, okay, that have been used. These monthly levels, even though they've been broken and to the left, and I'm still using them as kind of retest levels. If you can kind of make up what this kind of looks like here, yesterday was just an amazing day bouncing off higher time frames. So we had this yellow, orange, blue down in here, monthly, weekly, daily. Okay, turned out to be the bottom of the market. Okay, actually got long yesterday off of this. Had one of insane trade off of this. I did not expect it to go like that, right? I don't think nobody did. But the point that I'm trying to make here is that these monthly levels, okay, so I get the 510 lower, okay, there will be an unfilled gap here because we closed here yesterday, we gapped up here. So that's going to be leaving a gap at 504.44, give or take, on the SPY, okay? And so we have a couple levels down here too. Now, we just have to be cautious here where, of course, this market still has heavy momentum to the downside. We could see a little bit of a squeeze up here, okay, but that might take some time. I'll go over into some advanced option stuff in a moment, okay, but just be cautious and curious that, if this market does rally up into some areas where some selling might, I would say, resume, okay, heavier, we could easily make it equal to or lower low coming down into here, right? I'm not sure if this is going to be the bottom of the market just yet. We do have next week some options expiration too in regard to April 18th. So that's starting to come into light. Okay, but in regarding this week, just to kind of give you the lay of the land for this week as well. As far as news announcements, we do have Wednesday, tomorrow, 2 p.m. Eastern. We have a FOMC Fed meeting minutes. Okay, so it's not the announcement, but it's just taking questions and answers regarding their last meeting. Okay, and then Thursday we do have a core CPI and unemployment claims. So that's something that you might want to put on your radar for this week as well, in addition to everything else regarding the tariffs. Okay, this is more planned, of course, economic news. At the moment, you got to stay close to what's happening between China, EU, and all the tariff negotiations that are going on the back end as well, right? That said, we close out the week this Friday, the 11th, with core PPI and consumer sentiment and inflation expectations. So some news later this week is coming into play in addition to everything else. Okay, so on the downside, yesterday's low, I would pin that, right, and then get a couple levels here. See how markets react and respond to these areas here. Okay, call it that gap fill. Then we have this monthly level down in here, 494 rounding up, and then of course we got this low down here that was put in on the SPY for 82. Okay, Now, one thing I will say, I'm going to go a little advanced on y'all real quick right now. This is what's called options depth. This lets us know of what's called GEX, market maker exposure and GEX profiles. And I don't have enough time to go through exactly everything on this, but I will say this: we're about to open up, give or take, on about 30 minutes from now. Let me switch over to the SPX really quickly. Then I'll go to futures and kind of get to the basic program here. Mapping out global highs and lows on S&P futures. Yesterday's close here. Up here, we're moving. If we open, we're moving a little bit here overnight. Futures are up about 2.5%, and so the SPYs are gapping up, as you can see, about 2.5%. If that kind of holds over the next 30 minutes, sub 30 minutes, give or take. The point that I'm trying to make here, takeaway, is that SPX probably going to be opening up at or around. It could change a little bit here through 30 minutes or so, but at or around the 5190, 5200, maybe 5170. So that is that's just going to be an area where we potentially will be gapping up. Of course, we get the gap fills on this. By the way, on SPX, just while I'm here before I transition, here's a daily time frame of SPX. Of course, zoning out. We do a lot of work. I know this is kind of ghetto on YouTube where I'm just kind of streaming through my phone. But in the live trade rooms, you see my screen and it's all nice and clear. We kind of spent some time yesterday talking about these levels down here. The 2022 retest level 4800 that still has yet to been tested. I was kind of preparing for that yesterday down in here. But anyways, that was yesterday. Here's today. So if we're gapping up, and I have yesterday's high 5247. Right here. That's a hit point. Friday's high right here, 52.90, and then we have an even number here, SPX at 53. Also, that 53.24, which is a weekly level that was right below the September low that broke, could be potentially using it for a retest over here. Also, if you see this kind of yellow line right there, that is last week's VWAP. Last week's VWAP. So a little bit of just a rebalance. This market's kind of getting, stretching down a little bit too far. Too fast. So, we need to, rebalance just a little bit here. That's normal. Even in a market that's dropping very fast, or even in a bear market, you can get these 4 or 5% moves down, and then, a day or two later, you can get these 4 to 5% moves up. So that's I don't want to say it's a challenge. It's good. It's opportunity if you know what you're doing, if you understand your levels. Anybody who sold short yesterday on a gap down, move down, flush down into a monthly level, literally got their face ripped off. So you got to be very cautious with shorting markets. You don't want to be shorting equal to or new lows. You want to wait for rallies up into levels, to work on shorts. I was rallying up into, resistance and supply levels. You don't want to get trapped on the lower end of the liquidity. That said, if we rally up, we had that that weekly VWAP right there that comes in at about last week's VWAP, just a kind of rebalance from last week. That comes in at about 53.35. And I have that retest level on the weeklies at 53.25. Now, in addition to that, we are still in overall a negative GEX regime. So believe me, it's a heavy topic that I cannot. If you want to learn more about that, I'd say go to Phantoms, right? Go through the Phantoms education. It's a heavy topic. Take some time to learn. However, you see a lot of red here and a lot of light red and reds. That means that we're in a negative GEX overall profile. That means that market makers, if markets go up, they have to buy to hedge. Going with the flow. If markets go down, they have to sell into that with the flow. However, that's advanced. A couple of key takeaways here are going to be these positive green, positive kind of blue and green, what's called positive GEX gamma nodes here. So I'm just going to lay out a couple of them here for the Phantoms team as well. Kind of put this already in chat. Above we have 5250. Might want to write that down. 5250, and the next one is going to be 5350. This is SPX. So 5250 is where we have what's called a positive gamma node. So that's at or around yesterday's high. That's at or around yesterday's high. So what does this mean? In the event that we do gap up and move up, we could potentially flush up a bit more, because we have negative GEX, negative GEX, negative GEX. But as we approach the 5250, what's going to happen is we have a positive gamma node. Now it's very small, so it's going to be a tight kind of window here. But even yesterday we had a very small gamma node lower at the at the monthlies and the weekly and the daily lows yesterday at 48.80. right? And that provided some confidence that this market might be putting in, at least intraday, a temporary bottom, which ended up being the ultimate bottom and putting us in a position to get long for that massive move to the upside. Okay. Now that said, 5250, as we're coming up into that, market makers have to buy into flows. However, if we as we get at or around yesterday's high, okay, that's going to be matched with some selling flows. Okay, so some supply. Okay, some supply up here. Okay, next positive gamma node up here is going to be 5350. Okay, so these two levels here are super interesting in regard to, that's going to be 5350, just in regard to gamma. Okay, so 5250 and 5350 highlighted by these two kind of blue ellipses here, if you will. Okay, now that doesn't mean that we can't break that level. Okay, we could, as markets open up, also look at this thing called GAC spot where I have some order flow coming in regarding options as well. Okay, could be a little bit of a squeeze as we kind of get up here. All right, but too early to tell on that. I'm just kind of giving the lay of the land for now. Lower gamma node 5100, and then I have basically 5000. So it's pretty wide, right? As I was mentioning, even to the Phantoms team earlier today. And it is because we have implied volatility up and we got volatilities here, and SPX is swinging hundreds of points even intraday. So 5100 is a positive gamma node here, and then we have 5000 positive gamma node here as well. And as you can see, we have some monthly areas as well of interest as well. Okay. So if we so we're gapping up roughly about 5185 give or take on SPX. And if we flush down, okay, market makers could be selling into that flow, and then we have a positive gamma node at 5100, and then a positive gamma node at 5000. So these are just going to be kind of hit points, if you will, for intraday, bounces and flips, so on and so forth. Okay, heavy topic. Okay, to learn more about that, you'd have to learn. Go to phantoms.com, take a sip of coffee. Now, what I'm going to do is go over to futures and starting with the S&P and Nasdaq, and we'll map out our Globex highs, Globex lows for some Globex traps, in addition to everything that I just mentioned right there. All right, so here's Thinkorswim. And let me just go here. Okay, so I got the S&P daily time frame on the left, Nasdaq upper right, Dow Jones lower left, Russell 2000 bottom right. So as you can see, S&Ps are up 2.6%, pre-market, NASI 2.5, Dow Jones kissing, flirting 3% up, and we got the small caps here up 2.6 so far. Okay, here's a nice clean chart just on Dow Jones. Okay, of course we have this nice massive drop. During times like this, you got to be extremely careful with, succumbing and being a victim of extremely negative news. Okay, so you got to understand liquidity. Okay, I'm sure there's probably a ton of people that are trapped short, potentially down here. Okay, now we're up, right? We're up right now, roughly 3%. Okay, however, if I look at yesterday's high, yesterday's low, we're still inside of that bar. Okay, now we could potentially go higher. Okay, this is a nice little clean chart right here. So it's pretty simple, right? I mean, we basically have this supply zone that got put in from this drop that happened very quick. Okay, so that's pretty simple up there. All right, we also have a couple of retest levels. Now, if you notice on my charts on, say, the SPX and the SPY, which I covered there, you notice I have kind of like a broken line. Okay, so we have an impulse, we have a correction, and here's an impulse, new lower low. Okay, so these levels right here that get eventually inevitably broken, okay, it could be used as what's called a retest. Okay, and I'll typically just like break that line up. Okay, just keep it simple for right now, and that lets me know that, hey, this is kind of a retest area, okay, of a technical area, if you will, right? Now, just technical analysis wise, right? And of course, we're looking at some advanced things as well that I just mentioned with GEX and profiles and market makers and all that kind of stuff, right? That's a little bit more of a heavier topic. This is more of a simpler topic, okay? But also, this is also, in short, Friday's high. This is Friday's high as well. So even if you just keep it basic, And just look at the document that I provide for folks at Phantoms. Okay, you want to be mapping out, of course, yesterday's high, yesterday's low, but also relevant daily highs and daily lows. Okay, so we have some confluence here because this is Friday's high, but it's also kind of that breakdown level of which snapped, which made a new lower low. Okay, and then we have the supply level up here. Okay, just kept it simple for right now. Okay, now if I go to the S&P because I have all my notes here, we did look at some monthly lows down in here. Okay, and I was just talking about that on the SPX. Okay, as you can see, we had the 4,900 on the S&P 500. Now the low on the Sunday evening, if you will. This is a daily time frame of S&P futures. Okay, today's bar here. This was yesterday's bar. Okay, so S&P futures gap down, and if you remember on Sunday evening, if you were checking it, S&P futures and NASDAQ futures were down sub 4%. Okay, so it looked like it was going to just be a Black Monday market's going to end. Market's going to drop another 20%. Some crazy stuff was going on over the weekend online, right? This is why you have to be careful, right? So that kind of let me know a little bit too that the public arena and everybody's like, oh my God, Black Monday, the market's going to drop another 10% just on Monday alone, right? Flushed down into some monthly levels, okay? And then we're ripping to the upside, at least right now, right? Now, that could be short-lived, we'll see, okay? But we're filling in some space here. Now, we have some September lows that eventually got broken here, okay? So I'll break that line right now. Been in this business for a long time. It's hilarious. Usually when the retail public is frantic and heavy on one side, that lets you know that the opposite is going to happen. Okay, I'm big on that, understanding what the retail public is doing. Right, and typically, as a crowd, once all retail kind of agrees on the same thing, they're all most likely going to be all wrong. Okay, so that's a big psychological aspect regarding trading and investing. Okay, I digress. Anyways, a previous September low up here that comes in at about 54.04 on the S&Ps. Okay, of course, this is Friday's high as well, 54.60s. Okay, we also have a March low. Okay, that was a short last month ago, a week ago, give or take, week and a couple days ago. That was March's low, and we broke that. So, of course, we could potentially use that as some retest levels. Okay, we got the 20-pip moving average here as well. That's letting us know that, hey, we were extended down here. We were outside two. We were kissing about 3 standard deviations outside of here. Okay, that's unsustainable. Okay, typically you'll get what's called a mean reversion. Okay, that 20-pip moving average is a good tool, okay, to use as your mean reversion. Right? It's just a moving average, right? Lets us know, okay, great. If we get back, long story short, if we get back up to here, which a lot of people think, hey, do you really going to get up there? Do you really think it's going to get up there? Okay, it could be on a little bit of a short squeeze up here. This is a mean reversion. Now, if you wanted to sell short, if you're bearish this market, okay, up here, as we're reverting back up to the mean into supply, would be the time to sell short into that, right? Does that make sense? Not as we're flushing down, making new lows, okay, on monthlies. Okay, that's where you get trapped on the liquidity side of things, and that's why most people fail in this industry. Okay, is because they're emotional. Okay, and they don't understand when to buy, when to sell, and when to accumulate, when to distribute, and all that kind of good stuff. Right. So we focus heavily on that kind of on that. Okay, as professional traders. Okay, liquidity. Okay, now as we bounce up, rallying up into supply, if you are said bearish, it's reverting into the mean, coming into supply, where you can work on potentially legging into some potential shorts. Okay, in the event that this market's not going to have that be that low. Okay, you position yourself short up here, and then as we are coming lower, okay, now you're profitable on the short trade. Okay, taking profits down into the equal to or new lower lows. Okay. Again, you want to learn more about that, you'd have to go through some phantom stuff right there. Not enough time here. Okay, NASDAQ here. Okay, same thing as we're rallying up into these areas here. Okay, here's Friday's high. And, got the 20-pip moving average over here hovering about 19 daily time frame, 19,280, give or take. Okay, March's low right here, retest level, close to Friday's high. And we already have some levels over here mapped out, which I'm going to get to right now in the small time frames. As you can see, NASDAQ and S&P futures making new highs just for the day. All right. I'm sorry, for the overnight session, I should say. So far for the day, right? Okay. So for you new folks here, I got monthly here on the left, weekly here in the middle, daily on the right, monthly, weekly, daily. And, I see some questions that, it goes away in the chat here, but, I mean, I'm a nice guy, but this is go time. And, if you want to get trained up, get to Phantoms. I know most of y'all are in here, Phantoms, but try to get to questions. But this is go time. I gotta go here. All right. All right, so S&P futures here. S&P futures 1 hour time frame, Globe XI, overnight high. We just poked a new little Globe XI here. Overnight low here. All right, represented by that these blue lines here. Okay, and if I look, this is what's called a Globe X trap. Of course, here's yesterday's high. Okay, on the S&P futures. Okay, we do have a drop basing and a drop right here, IBI a little bit right here. Okay, that this market found some supply yesterday being here. Okay, however, if we do snap that, okay, we could potentially be looking at this, what's called that September low that got broken as that retest level up in here, right? So I'll just make these red. This could be what's called a Globex trap short. So if you're long, I would suggest to TP, take some profit. And these could be used up here for Globex trap short. All right. So these prices come in. I'm going to bring this one up here a bit. S&P 5433. All right, that would be the upper end of this here. So up into the 5394, up into the 5433 handle, S&P futures. I'll repeat that. Oops. 5394, 5433. Okay. Could be a nice area potentially. Okay. This could be matched with some SPX, some SPYs, so on and so forth levels. Okay. Some retest levels as well with those positive gamma nodes as well. Okay. In the event that that does happen to break, we also have that March low retest up here. Call it 5490 for a potential Globex trap short as well. Okay. So we got some supply above, right? And so as I repeat, if you want to short this market, it's not the time to short down here. As we rally up into supply, this is where you would want to be working on said shorts. Okay. Globex trap lower in the event that we break the Globex low being 5090 right there. Okay. I want to be a little cautious on this level right in here. I believe this is where we have the positive gamma node here at S&P 500 5000. Okay, if I'm not mistaken. So we could use this 5,000 S&P futures even as well as some Globex trap long here. I'd be careful with this. This is a little bit aggressive, right? But that's something that we could potentially look at. All right, but if this gets blown out because we have VIX higher and some crazy talk happens today, okay, we could, I don't know, we could make a new low. I would not be surprised if we make a new low, okay, or at least retest these lows, okay, from yesterday. All right, so this is an aggressive G-trap long. All right, that comes in at about, I'll give you the price in a moment. All right, and map out and combine the S&P futures levels with the SPX and SPY levels as well. That will help your futures trading. All right, so I'm just going to round down here, 5,015. Okay, and then we got yesterday's low being here, 48.32, as you can see here. All right, 48.50 rounding down. All right, so that's definitely something to put on your radar in addition to everything else mentioned. All right, 4,900 here. All right, so pretty cool here. Some volatility, which is great. If you know what you're doing, this is a great time. If you don't know what you're doing, jeez, you gotta find out. NASDAQ, I'll go through this pretty quickly here. Globex high, Globex low. Here's the Globex low. Here's the Globex high. All right, yesterday's high here, 18,340. Okay, make sure you pin that. All right, if long TP some here. All right, Globex trap. I mean, we could be looking at this level right here. This was developed overnight, Friday overnight, 1, 2, 3 a.m. Eastern Standard Time. We dropped down. There's a supply level here, so you can't argue that. It was developed overnight, so it's less reliable from overnight, but a lot of supply dump right there on NASDAQ futures is where I'm at right now. All right, that level comes in at or around, I'm gonna go to the upper end of this, 18,700. Okay, could be a little liquidity sweep right above that number as well. So this could be an area for Globex trap short. Overnight level. So in the event that this did want to go higher and squeeze up a little bit more, okay, squeeze out some short sellers, okay. I'm sure there's a lot of people trapped from yesterday still remaining, hoping that this market goes down, and if it rallies up, they might be forced to buy to cover, okay. 18,900, which was a level that developed during the regular trading session, last week, during Thursday. That could be a hit point level, NASDAQ, 18,900, as I repeat, okay. Lower, I'd be careful. NASDAQ has been a little bit more weaker. Now, yesterday put in a little bit more of a bid than the S&Ps, for example, right? But, overall, tech has been getting kind of bullied right now, okay? So far, that's still kind of the case, okay? This is yesterday's low down in here, 16,000, I should say, 500, give or take. So make sure you have that on your radar here, okay? Below the Globex low, okay, we have this August low here that gap down below, okay? But, it's broken now, but I keep those on monthly levels. Okay, you can see even yesterday, we broke down below the September low, but we used it. You got some supply here, retest, and retest here as well, right? So this is broken as well, but monthly levels I like to keep on. Orange is monthly, right? So for a Globex trap, this could be aggressive right here, but we have a demand level from yesterday's kind of just base level, okay? And that comes in at what, 17,201, so 17,200, but this is super aggressive, okay? This is super aggressive. So make sure, I'll put an asterisk on that for Globex trap long. All right, and we cover what this means we'll cover what this means, of course, in the, we have these things called focus classes, right? So that's where the teaching immenses. This is where rubber meets the road. All right, so you can see NASDAQ putting in a nice little flow here, okay? So we'll see, okay? All right, gold. All right, gold pulled back nicely into a impulse basing impulse. My Phantom's probably on this right now. We have an impulse basing impulse right now. Gold, this is gold monthly, weekly, daily. It might be hard to see here on this. So here, I'll go to GLD real quick. This is the ETF, that was gold futures. This is the ETF exchange traded fund on gold, the main one. Got monthly here, weekly here, daily here. Got all these notes on this thing here, but this should be a little bit more cleaner here, okay? If I kind of stop and zoom here. All right, so gold, on a daily time frame, all right, obviously all-time highs, a short week ago, right? And some retail notes of retail jumping into gold market, nice little pullback here. Now we did pull back into what was once an all-time high, February high, and we retested that to the T on this side. So This is a nice little retest. I was hoping that it kind of came lower down into these levels down in here. Okay, today gold is gapping up on the GLD side of things here. Okay, my phantoms and teams and all that kind of stuff were kind of prepared for if this does go lower. Okay, of course we got some yellow down in here. We have what's called an impulse, basic impulse here on the weekly time frame. I'm on the daily time frame, but we zoned in on this weekly impulse, basic impulse, higher high with a couple levels down in here. Okay. In the event that we do come deeper, right now, pre-market quote is up here. So we closed here yesterday. We, again, like I mentioned, we touched this retest level beautifully right in here. We had a couple of unfilled gaps down in here, which I was hoping that we came lower. We still might be able to come lower down in here potentially. Okay. But right now pre-market quote is up here. So it's an inside gap. So it'll be pretty interesting to see if, we pop above yesterday's high. This could take some time to potentially kind of sift its way through to potentially revisit all-time highs. Okay, but gold, yes, during times of uncertainty, it could be potentially used, is used as a quote-unquote safe haven. Okay, but pretty interesting to see if equities could kind of rally a little bit here, just temporarily, potentially for right now, putting in like a short-term bottom, right, building up some steam, and it'll be interesting to see if, because right now markets were down, gold down. Okay, now markets are up, gold's up, so it's a little bit typically it's an inverse correlation. Okay, so I'm curious to see how it's going to unwind if equities continue to kind of rally up just for a little bit here. Okay, kind of like a dead cat bounce, if you will. And then if gold kind of trickles down a little bit more lower, I'm kind of hoping that gold trickles down just a little bit more lower, selfishly so I can build a bigger, deeper position long down in here. Okay, but as you can see, we dropped down pretty quickly here, just retested a previous all-time high, February high, and just markets, people just took that as a nice, beautiful buying opportunity and picked it right back up from yesterday and gapping up in here today. Okay, now I'm kind of, as mentioned, we can map out the overnight high, overnight low here as well on gold futures. And you can see I have that note there, all-time high supply, 59.75, and as you can see, that's basically yesterday's low. Okay. And, we're trading off that right now, okay? But, we could potentially come lower, which I'm kind of hoping that we do, all right? But if we might not, right? So here's Globex low, here's Globex high. All right, gold would still be a market that I'm not looking to short, right? I'm waiting for levels to come lower and deeper into these weeklies and daily timeframes to build a more bullish overall long position. Okay, we do have some supply above the Globex high here. Okay, you can see there's like some wicks drop down. Okay, but again, be careful shorting gold. Okay, just because we could potentially expect a drop down lower doesn't mean it's going to happen, right? All right, because you say, oh, Mr. Blue, if you think it's going to come down lower, should I short gold? No. Okay, would be careful shorting gold. Okay, wait for the drops to happen potentially if that happens, because it might not even happen, right? This might be the low where build enough buyers to potentially revisit the equal to or all-time highs. Okay, so if we go lower, okay, I'd be building a position down in here. Okay, I'd comfortably sidestep shorting gold. Okay, I can miss that trade any day at the moment. Okay, I'm not looking at short gold. All right. Okay, so anyways, VIX, monthly, weekly, daily. I'm just gonna change this for the open here while I'm here. All right, so just focus on this right chart here. VIX down. All right, VIX down so far overnight. VIX down, market up. VIX up, market down. A lot more to that, but inverse correlation. All right, here's overnight high, overnight low. And if VIX sustains its lower low movement, markets could come up a bit more and go on a little bit of a squeeze. Okay, if VIX starts to spike back up, so on and so forth, okay, and sustain up with an uptrend, that could be a lot more bearish for the market. So it's one of the things that we look at literally religiously. Can you supply demand for VIX? Yeah, in a way, but it's more of a gauge. It's more of just like levels and what's high and what's low. Like you'll hear traders say, okay, we're printing a VIX 50 handle, right? It's not like you're not mapping out levels like when you go through Mr. Black and you're scoring out the levels. No, it's a gauge, a barometer, if you will. All right, but yeah, key levels, right? Like you map out key levels, like what was the COVID high of during like insanely during times of quote unquote madness, those are the key hit points. Those are the key hit points, right? So we had the Japan carry trade unwind. That's VIX 65, right? So on and so forth, right? And so you get an overall gauge of what's high and what's low, but you're not mapping out demand and supply. It's just a gauge. It's a gauge, volatility. And I could spend probably 8 hours in total talking about vol. Not 2 minutes before market opens. Okay, we already kind of went through SPYs. SPYs are already gapping up, even as we speak right now. S&P futures, NASDAQ making new highs, right? Already revisiting the prior day's high. So pretty interesting here. Okay, and again, we had a high gamma node up here on SPX regarding that high. So it'd be pretty interesting to see how market's going to respond up into the 5250 and the 53 handle on SPX. Apple close here, slight gap up, inside gap. On Monday we went through, yesterday being Monday, we kind of go through our Monday sessions, and we kind of mapped out certain levels that if in the event that this market goes lower, I don't have enough time to go through it right now. Amazon outside gap up. All right, outside gap up on Amazon. So clearing gap on Amazon, relative strength. We'll have to see if that there's a gap and gap up and fade lower. All right, so I know we have a lot of gap ups here, so we just have to be a little cautious on it, right? Trade the tape off the open. All right, you might want to wait for the opening day's range to kind of paint out on a lot of things here today. Broadcom gap up as well. Broadcom did get approved for a $10 billion buyback on their stock, so that's interesting. All right, the market's just opened. So let me just get some internals here real quick. Be patient off open. All right, SPX. The official open is 5193-ish. Okay, stepping up a little bit here to still inside gap. Let me make sure all my stuff's loaded here properly. All right, stuff seems to be working fine here. Let me just get a thumb on the pulse regarding internals. Too early for cumulative tick. All right, advanced declines, interesting. Up here at the extreme, plus or minus 2,000 is the extreme. The past 2 days we've been down lower here, down in the lower extreme. Okay, you can see yesterday we had a rip up on advanced declines here. All right, but we're at the extreme to the upside here this morning. Interesting. We'll see if that holds and sustains. All right, but this market's still going to be a little heavy here. Vol D up. So we just have to watch out for a gap up, fade lower all day today. Well, you could potentially trade that, right? Let me get that gamma node here. All right, so remember that 5250, right? That 5250 is a hit point on the SPX. All right. So if we rally up into the 5250, you can almost put in an order to sell short into that level as a potential bull trap. Okay. All right, now negative gex works both ways. So we give this out, we can flush lower too, right? So be patient with that. So 50, you know, you could even maybe go up above here. We have a little bit of a wick right here. So you could put in an order here, potentially 50 to 65 for a bit of a trap to the downside. All right, now if for SPX, it's a bit expensive right now for most folk. It's my favorite thing to trade on the planet. You could potentially, you know, you gotta be extremely careful with this and be okay with cutting the loss very quickly if wrong on this. But if you wanted to ride ride some up into that level in the event that we might not hit that level, okay? You could potentially work on some SPY calls here up into that level, okay? Or you just potentially remain patient, okay? If we take this out, then you know, we could potentially flush lower, okay? So what I'm gonna do right now, given the fact that VIX is a bit more calmed down here, all right, I'll pick up the 525 here for a quick little scalp trade here. Strike call on S&P, SPY futures. All right, so I just got filled on the 325. Strike call for 360. Let me get this in my other account. Okay. Just go filled at 332. I gotta be extremely careful with this trade. Went small size on this, small size, small size. All right. All right, long call. But this is small size. We can easily cut this. All right. If we snap below opening print. Okay, I took that in SPYs. All right. So if we snap below opening print on SPX, I just cut that. All right, now kind of what I'm hoping for is in the event that we get up into this 50, as mentioned, if we could get up into here, we have to be careful with this trade, right? If we can get up into the 5250s, that would be a better weight, that would be a better level to short into, right? But I might just have to cut these spots, to be honest with you here. They're down 50 cents there, but I'm gonna wait to see if we can break below the opening day print on SPX, okay? Let me see if I get something else here. AMD. So be a little patient with that. I want to see how the SPX responds at that 5200 too as well. So flat SPX. That's the big contract that I'm trading there. But flat on that right now. Off open. Yeah, so we got to be careful with these gap ups. It's probably most likely going to be potentially just a bull trap. So I want to see how SPX responds here. All right, right now, gap up, fade lower. Q's rebouncing on last week's VWAP. Let's pull in a VWAP here. So just gotta be patient. Most of FANG at the moment is a bit heavy on the gap up. Fade lower. Thesis here. Alright, but want to see how SPX responds at the 52 area here, right? A little bit of a positive gamma node there, but nothing too crazy. That could easily give out. All right, so again, I have no problem getting short. Don't get me wrong, we are below VWAP here, so I gotta be extremely careful. So let them just reduce exposure on this. All right, so I'm gonna see if SPX can hold that for right now. It's looking like it wants to give out, but just being a little patient here. All right, so one thing that we could do here too, while we're letting this opening day's range kind of put in here, we are below, this is SPYs, we are below VWAP, so that's the thing there. We could put in an order. Let's see what the exposure is on this SPY trade. All right, down about $1, nothing too crazy there so far. Just being patient. We could put in an order here. That if we get up into $52.50, $52.60 handle. Okay, yesterday's high is 52.47. Okay, 52.47. So if we snap yesterday's high, okay, might go on a little bit of a flush there. And so if we get up into 52.60, we could potentially enter a bearish trade on a liquidity on a bit of a liquidity sweep there. Okay, like a bull trap. Okay, and you can see the only thing that we really have above yesterday's high is this is what Friday's high here, 52.90. That's something to put on the radar. Okay, and we have this little wick here. We dropped and we rallied up. This was like a VWAP, a little bit of a fakey breaky above VWAP. I remember this on Friday, and so that comes in at about 51.60. So if we put an order up here of about 51.60, right above yesterday's high, right at this kind of 52.50, 52.60 kind of gamma node here, that could potentially be a nice little area to potentially short into. Okay, so far this fall through long is not working out, but we're still inside this opening bar print on SPX. So if this gives out, I'm just gonna cut that, no big deal. All right, so I'm only trading SPYs right now, very low exposure, very low exposure. Okay, so 52.60. So if I'm biased to the SPX, I love SPX. So let me show you something here. So if we can get up here. I'm still holding those long calls right now. It's not telling me to get out. SPX will let me know. No thoughts, no feelings. Execute a plan. Keeping my exposure low for now. Come on, take or swim. And I'm targeting a certain delta here. So over here, I'm going to put in thinkorswim. If we get up to, what did I say, 52.60, 5260 SPX. Okay. Typically, I like to target like about a 25, 20 delta, give or take. All right, implied vol is up, so it's going to be a little more expensive here. But let me see. So I don't want to get too far away here. Because what I'm looking to do is buy a put as we get up into 52.60, right? And I don't want to get too far away. Let me see what the 5100 would look like. That would be about like what 160 points away. But you know, with these market moves, even deep out of the money options have been going nuts. So we can get away with that at least for right now, being out of the way that far away. But mainly going to be targeting a certain delta. So if I go to the strike price of 5100. Right now it's a 20 delta, so it's going for 1,400 bucks. SPX is a beast. But if we get up to 52.60, this will be about 600 bucks cheaper. So if I take 1460, which is going for right now, which is changed to like 15 minus 600, give or take, it's going to be roughly about 900 bucks. You know, and with the volatility here today, you know, it could be anywhere between like 8 to maybe I hate to say it, but like maybe 850 to maybe like 950, give or take. Okay, for this 51 strike put, it'll be about a 12 delta in the event that we get here. Okay, and so that's something that you could potentially condition, right? So pick up, say, the 5100 strike put. Okay, I kind of priced it out. It'll be about 850 to maybe 950, give or take, on when and where we get there. If we get there, okay, for the 5100 strike put, it'll be about a 12 delta. I can right click, create duplicate order here, right? And then this sets up an order bar for this particular strike, and I can open up the settings right over here to the right, and I can condition this to buy this SPX put. Okay, you know, SPX, you know, when we hit a level like that, you know, no problem, you can get in market. Maybe I pay 5-10 cents. Not that big of a deal there. SPX super liquid. Okay, equal to or above. Okay, putting a conditional order on this. Buy this put 51 strike. Okay, for a day trade, equal to or above 52. The trigger threshold, kind of like a limit order, if you will. It is a limit order in here, right? Threshold being the what? 5260, that high gamma node, okay, right there above yesterday's high for potentially a trap. So we're about what, 13 points above yesterday's high, okay, potentially a bull trap up there, all right, with that gamma node that is letting me know that there's going to be some selling pressure potentially coming in to that level, okay. Save that, put that in, okay. And we'll see if that plays out. I'll just put it on the trading view chart. All right, so as you can see, I'm still long these calls on SPY. All right, so we need to move here. All right, they're down about what, like 30, 40 cents, give or take right now, but we'll see if we get a pop. All right, now if this thing makes a new low here, just cut out of this. All right, so we would need a pop here. All right, we'll see. Floating down about like what, 30 cents. Nothing too crazy there in terms of exposure. I got just be patient, and you got to be okay being wrong small. And then I got a conditional order here at 52.60. All right, so if we retest yesterday's high on SPY, SPX, Qs, etc., TP some of those calls. if that happens. If that doesn't happen, then this trade puts kind of like I treated this little SPY, little long call baby trade here as kind of a thumb on the pulse, if you will, right? So if that doesn't work out, like meaning if we can't even retest yesterday's high to potentially scale out and TP some of those calls, okay, then we're either going sideways here, or we're potentially breaking down. All right. So it's a small price to pay to get a thumb on the pulse of the market right now. All right, have a conditional order here. To buy. The 5100 put on SPX for a bull trap. All right, that comes in at what, 52.60, right? All right, so far opening day's range is in. I got a daily time frame on the left. I got a 30-minute here, and I got a 2-minute here. And it's sideways, so you gotta be a little patient here. All right, so we need some liquidity. All right. Again, I'm sticking to the I'm sticking to the plan here. I'm not going to cut this unless we break down below SPX level here. All right, so opening day's range is kind of just sideways right now, so we'll see. You know, like I said, if that SPY long, 30, 40, 50 cents, 70 cents, no big deal. All right, very low risk exposure right now, just while this opening day's range kind of sifts out. Okay. All right, let me order up here. And that's my time for now, folks. I'll give you one quick little look here at the cumulative tick higher up a little bit here for what it's worth. Volume's up a little bit here, but advanced declines holding up extremes here. But if this thing starts to give out, this market could, of course, be going lower. Watch out for the negative GEX regime. It could feed on itself there, so cut that SPY. If SPX kind of conquers the 50, reclaims below 52 and 51.90 handle. All right, and then you could potentially start to work on some puts, sell short rallies. I'm about to cover the dips on lower liquidity map. Be patient today. We have competing forces. Y'all are in chat, chatting away. Good to see. Opening day's range, flat. And it's way too early to talk about theta. Somebody was mentioning theta. It's 9:52. And you could, with these markets, you can literally move 50, 60, 70 points in 10 minutes. Yesterday, in 8 minutes, we did an 8% move in the SPX, albeit it was off some bullshit news, but can't swear. That's my cue to go. All right, if you want to learn more about this, this market's giving us a little time to organize our morning, right? So take the time. All right, TP those calls in the event that we get equal to or new higher high. I got a conditional order up there. All right. That said, if you want to learn a little bit more about that, head up TradePhantoms.com. It's the blue here. Click on register. And Thursday, April 10th, 7 p.m. Eastern Standard Time. Name, email, pretty standard there. Register. Here's an agenda of what's going to be covered. All right, Mr. Black and or Mr. Green. Sometimes both of them will help out together in there. We'll kind of go through a 90-minute session there. What Phantoms is all about, how markets work, right? Right, we're all professionals here. Stocks, futures, forex, options, trading for short-term income, all the way to long-term wealth. So kind of one-stop shop for everything here, even crypto, right? So yeah, if it's for you, great. If not, great as well. No big deal. But that's where everybody here starts. And just be patient here. Don't get chopped up. Don't get chopped up here. Relax. Let things develop. Okay. Let things develop. Let things develop. Okay. As you can see, I'm just still holding on to the plane here with these long calls here. Right. We're below VWAP. I was trying to get out, get in, get out, get in. Let this opening day's range kind of play out. Okay. And be patient. Okay. Paint bars, as my phantoms know what to do here. Okay. Paint your bars. 30-minute bar close in about 7 minutes. See how we print. Okay. So on and so forth. Take it step by step. Don't think, don't fail, all right? And risk management. Trade safe. God bless. Take care. Blue out.